Well, hey, it's Dave Dubeau, and welcome back. Today we're going to be talking about how to propose a joint venture. Super important if you want to use other people's money, you got to let people know what you're doing. All right, so on today's video, we're going to talk about 7 steps for you to be able to propose a joint venture to a potential investor partner. We're going to give you a big tip and a case study on somebody just like you who's rocking and rolling by bringing on joint venture partners for his deals. All right, so the first tip for getting people to come to you to be able to propose a joint venture is to attract your potential joint venture partners instead of chasing after them. So chasing after them is calling up, dialing for dollars, networking, schmoozing, spamming people, all that stuff that we see a lot of other folks doing. I want you to avoid. And instead what we're going to do is we're going to use intelligent marketing to attract your ideal joint venture partners. And how do we do that? It's all about constant, consistent, edutaining communication. So what is constant? That means it's coming out on a regular basis. I'm going to recommend at least once a week. What is consistent? That means you're always talking about the same things. Your primary real estate investing strategy and your primary market where you're investing. And edutaining means that it's a little bit educational and hopefully a little bit entertaining. Here's a big tip on how to make it entertaining without having to be a clown, and that is that you use stories. Show examples of deals that you've done. Show examples of deals that your friends or associates have done. Use actual case studies to illustrate what you're talking about. It goes a long way. And then always have a clear call to action at the end of all of your marketing. Something like this. Hey, if you'd like to find out more, go ahead and click on the link below, book a call, let's have a conversation, see how this can work for you. If you do all of this, you're going to attract investors instead of chasing after them. Now, the second step for proposing a joint venture is to avoid explaining your deals over the phone. Really, really important. You're probably going to get people calling you up when you start doing this edutaining communication. They're going to want to know more about your deals, and that is great. However, don't try to explain it over the phone. Here's why. It's going to go in one ear and out the other. Plus, when you're talking to somebody over the phone, you cannot read their body language. So what I'm going to recommend that you do instead is that you book ideally a face-to-face meeting with the person, or the second best choice is to jump on Zoom and meet together so that you can see each other. And then that way you can also share your screen and walk through a really well-organized, well-structured slide deck presentation, something like a PowerPoint or a keynote presentation. That goes a long way. It keeps you on track. It's a lot more visually interesting for the other person, and it just makes you do the same thing in the same way, which creates a system which is going to get you consistent results. So don't try to explain it over the phone. Explain it with a good presentation instead. Now, in your presentation, I'm going to recommend that you have lots of stories and you always keep things focused on what's in it for the other person, right? Don't just be showing how smart you are, how successful you are, how many great deals you've done. That's great. That should come through in your presentation. But what should really come through is what are the big benefits for your joint venture partner to invest with you, to join forces with you in that deal. That's what you really want to focus on. So the third step, after you've avoided explaining things on the phone, is to figure out where you're going to meet with the person. So here are my choices. First choice is, if at all possible, try to meet on your turf. So for example, if you have an office or if you have a boardroom that you can use that's your own turf, try to use that. If that's not possible, another good choice would be neutral territory. So maybe you get together at Starbucks or something like that and you meet on neutral territory. Third choice might be meeting at their home. I don't really like that choice because that's their turf, not your turf, but it's better than nothing. And then another choice is if they don't live close to you, the fourth choice would be meet on Zoom. Like I mentioned, it's the next best thing to being there in person, and you can see their reactions, you can see the other person, and you can share your presentation as well. All right, let's assume that you're going to be meeting with a person on neutral territory. Let's say it's at Starbucks. So the fourth step would be to make sure that you show up for your meeting early. Show up ahead of time. And this is after you've confirmed the meeting with the person via text message or a quick call. You've confirmed that they're going to be there. show up 10 to 15 minutes early and make sure that everything is organized. You've got your computer set up with your PowerPoint presentation. You've got a table, you've got a booth, you've got a space where you can sit down and work with the other person and walk them through the whole thing. The other thing I highly recommend is get the coffee orders ahead of time. So that way when they show up, you've got the coffees ready to go and you don't have to waste time waiting in line and then doing the arm wrestle for who's going to pick up the tab. So have everything ready to go ahead of time. The fifth thing I want to talk about is understanding what the purpose is of this initial meeting. The purpose is not to get the person to cut you a check for 50 grand or $100,000 or whatever your minimum is. The purpose of this meeting is to get a signed expression of interest, or another word for that is a letter of intent. What is that? That is a non-legally binding document, so it's not binding legally, but it shows that the other person is really serious about investing with you in a deal. And it shows what the minimum amount is that they're willing to invest, and it gives a time frame. Now here's the big thing. Just by them signing off on this document, even though it's not legally binding, the chances of them actually coming through and investing with you increase exponentially. So that's the goal of this first meeting, not to get a check, but to get the ball rolling. And the first thing we want to do is get that expression of interest signed off on. So the sixth thing I want to talk about when it comes to proposing a joint venture is what you're going to actually say before you start your slideshow presentation. I call this the upfront agreement and overview. And very, very few people do this. However, it's really going to set you up for success, and it takes all of the stress off of you as well as all of the stress off of the other person. And here's kind of what that looks like. So when you're meeting with a person, you're sitting down, you're getting ready to go over things, you're going to say something like this. Okay, let's say the other person's name is Jim. Jim, here's what we're going to do. I'm going to go through this whole presentation, show you what it's all about. And at the end of the presentation, one of two things is going to happen. Either number one, you're going to see it and it's not a good fit for you at this time, and that's perfectly fine. Or number two, you will see that it's a good fit and you want to see what the next steps are and get the ball rolling. Does that make sense? So at the end of the presentation, are you okay giving me a yes, I'm interested in moving forward, or no, it's not for me? You said it like that, and that solves all of the problems of the other person coming to you and saying, hey, let me think about it, sounds good, I want to mull it over. It gets you a solid answer. Now, you're not getting a check right away, but you are getting them going, getting things moving. And here's a beautiful thing. It gives the other person permission to turn you down, because a lot of people don't want to hurt your feelings. So they might jerk you around at the end and say, hey, it looks really good, but really they're not interested. So this gives them permission to cut to the chase and say yay or nay. Does that make sense? That's going to save you a lot of time and heartache chasing after people that are really not that interested. Okay, so after we've done that, then the next thing I want to do is I want to plant the seeds of the kind of questions they should be asking. Because here's the reality. Joe's coming into this. Joe is not a real estate weirdo like you and I. Joe is a normal person, okay? Joe doesn't know much about real estate investing. Probably Joe doesn't even know what kind of questions he should be asking. So what we want to do is we want to plant the seeds of the questions he should be thinking of. And here's how that looks. So Joe, chances are, as we go through the presentation, you're probably going to have a bunch of questions for me. You're probably going to want to know, well, Dave, why are you investing in multifamily properties? Why do you like this particular market area? What's the time frame for the deals? What are the risks that are involved? What kind of returns can I be expecting on this kind of a deal? And those kind of questions. So Joe, are you comfortable asking me those kind of questions? And then Joe's going to say, yes, of course, he's comfortable asking you those questions. And then guess what we're going to cover throughout the presentation? We're going to be going through that stuff. We're going to be going over those different topics. And when we get to that point, Joe's going to be thinking, hey, I was kind of wondering about that. And we're going to answer it right there. But here's the thing. Joe wasn't wondering about that before we planted the seed in Joe's mind. Does that make sense? So we want to plant the seeds of those questions and get them to say, yes, they're open to asking us those kind of questions. Okay, and then the next thing we do before we actually start into the presentation is we get Joe's agreement that he's willing to answer our questions too, because there's a two-way street, right? But it's very important that you position this properly. So the way I do it is like this. Well, Joe, and to make sure that this is a good fit for you, I'm going to have some questions for you as well. All right, did you hear that? To make sure that this is a good fit for you, right? What's in it for them. So Joe, to make sure this is a good fit for you, I'm going to want to know things like, well, what kind of previous real estate investing experience do you have, if any? What other investments are you involved in? What do you like? What do you not like about them? What kind of returns have you been getting? What are you looking for? What's your risk tolerance level? What's the time frame you're looking for? How involved do you want to be in these kind of deals? Those kind of questions. So again, Joe, to make sure it's a good fit for you, are you comfortable answering those kind of questions? And then I like to do a little nod. It's very difficult for the other person not to nod along. And Joe's going to say, yeah, sure. So now we've got agreement. And Joe has agreed that he's willing to not only ask questions, but answer my questions as well. And now we're ready to get right into the guts of the presentation. All right, so there you go through your entire presentation. You get to the end. You say, okay, Joe, so what do you think? Does this look like a good fit for you? And Joe's going to give you a yay or a nay. Yes, he's interested, or no, he's not interested. And then the next steps, probably he's going to say, yes, I'm interested, because it's very low risk for them to see what the next steps are. Then what we want to do is we want to get Joe signed off on that expression of interest. So have that lined up, have that ready to go right there, have it filled out, and then Joe just needs to sign off. And then you can give the original copy to Joe, take a picture for yourself, or vice versa. It doesn't really matter. The goal of these meetings is for you to get a bunch of expressions of interest signed off on, so you've got your investor ducks in a row. You've got those joint venture partners waiting in the wings, ready to jump onto your next deal. So now, instead of scrambling for the money when you've got a deal, you've got the money lined up first. Now you can go make offers. You can negotiate harder. You know that you've got the capital that you need when you need it. Now, if you like this kind of overview of how the whole process works, I've got a full-on training all about this presentation process, and you can just click on the link. I'll put that in the description below so you can access that. Now, one of my favorite stories around this is around one of our clients, Rick Wheeler. He is really kicking butt with joint ventures. In fact, when I first met Rick, he was like most people, right? He'd done his first deal under his own financial steam. He had a single family home. It was actually negative cash flow on that property. So fortunately, Rick was a quick learner, and he learned about real estate investing. And then he learned about attracting investors, raising capital for me. And he went and he took massive action. And very, very quickly, in fact, within a year and a half, Rick built up his portfolio to 19 single family homes with basement suites in them. Each one of those properties done with a different joint venture partner. Well, actually, he had some joint venture partners that did 3 or 4 deals with him, but each property had a separate joint venture partner on it. So he built up that portfolio, 19 properties. Each one of those properties had a basement suite, and he was really smart. He'd rent out the garage separately. It had a separate detached garage he'd rent out. He was cash flowing $900 a month per property after he paid his joint venture partners out. So doing very, very well. Then he started to scale up. In fact, last time I talked to Rick, he was closing in on a 23-unit apartment building just outside of Austin, Texas. He was also starting to do some development deals with investor partners. He was really, really crushing it, all thanks to doing these joint venture conversations and attracting joint venture partners to him. So speaking of how to propose a joint venture, if you'd like to learn more about this, if you'd like to learn how to attract these joint venture partners to you so you can have these conversations, then I've got a great resource for you. It's my book. It's called The Money Partner Formula, and you can click on the link in the description below to get a copy, or go to investorattractionbook.com.